Have you heard the news? The Fed is going to raise interest rates next week. But not to be scared, I've got some news for you coming up right after this. Hey there, it's Ryan Skaggs, and this is the Mortgage Minute. This channel is dedicated to everything mortgage, real estate, and interest rates, and we're going to dive into those interest rates first. So, got the interest rates up here right beside me. The average 30-year fixed at 5.54 according to Freddie Mac. Now, you can check out the link below. I put that survey in there every single week, so therefore you can follow along with where the average 30-year fixed has been and where it's going. Absolute great chart. Again, you can check out that link below. Now, while you're down there, hit that like button, hit that subscribe, and click that bell icon to be notified as I'm putting out weekly videos on the channel. I would be forever grateful for the subscribe. So, today what we're going to talk about is the Fed meeting, the Fed raising interest rates. And when I say it's likely going to happen, it's going to happen. The Fed is raising rates as of next week. This video is coming out mid to late July. The Fed meeting happens at the last week of July. And during that meeting, they're going to raise interest rates. The question is going to be by how much? Now, here's the good news. So don't let that scare you. Here's the good news. It's already baked in. The market already knows. If I'm telling you that's what they're going to do, economists and traders and basically the financial world already knows that interest rates are going to rise in terms of what the Fed's going to do. The question is, by how much? Right? So the Fed will likely come in and raise their Fed funds rate or prime rate, which is going to come kind of basically correlate to by 75 basis points. If they raise it by 100, that could affect the market positive and negatively, but that 75 basis points is already baked in. Now, I've done videos in the previously kind of about the Fed raising interest rates, what's happened, things like that, and I'll put that right up there for you just for some added video content, some added knowledge base on what happens when they do raise interest rates. But again, my point today is that it's already a known quantity. They're not raising the 30-year fixed. They're raising their Fed funds rate, which correlates to prime rate, home equity lines of credit, credit cards. Basically, consumer lending is based on this prime rate. So those rates will likely go up here as of next week. Now, how is it going to affect the market? And again, you can probably know where I'm going with this. It's already baked in. That conversation's already been had. It's already been known. They've already kind of leaked that, to the world to say, hey, this is what we're going to do. So my contention would be is that if they do exactly what they say they're going to do, interest rates may actually go down just slightly because they actually came good with what they're doing, and it's hopefully going to stave off inflation, keep us out of a quote-unquote recession. And I've talked about this before, and I'll link a video here again, but going into a quote-unquote recession and how it applies to housing prices. Housing prices typically increase at or after a recession rather than decrease. So as interest rates go higher, as that piece kind of goes up, housing prices over the last, if you look over the historical data, you'd see that housing prices typically inch up by anywhere between like 3 and 5%. We're not going to see these massive returns of 10, 15, 20% year over year that housing has seen over the last few years, but still likely to continue to increase. So that narrative around, oh my gosh, housing prices are going to go down because we could be quote unquote going into recession, historically just not there. So again, thank you so much for tuning in. The Fed will be raising rates. Nothing to be scared of, right? So this is the Mortgage Minute. My name is Ryan Skaggs. Thank you so much for tuning in, and we'll see each other again very, very soon.